Okay, what we're going to do when you go to take the test, Stacy, you're going to find that there are questions on two aspects of it. Now I'm talking about the Utah law test. You're going to be taking the Utah law test, right? You know, the exam has two pieces, national and state. And if you've never taken one before, or, you know, anyway, you'll be taking the Utah law test, and the Utah law test is like 40 questions and the state is about 80. So, you know, when you're done with one, then you click out of that and then you go into Utah law. But in Utah law, there's two sections that if you're not ready for it, it can be kind of scary. And one of them is they're going to ask you some questions about the real estate purchase contract, which we'll be talking about tonight. Another one is they're going to be asking you some questions about settlement sheets. And so if you walk in there and you've never seen a REPC, that was a big mistake. And if you walk in there and you haven't looked at a settlement sheet, that's also a big mistake. But really, when you get right down to it, they're asking you a series of questions, but the REPC and the settlement sheets are actually like a crib sheet. The answers are all on those two documents. So if you're familiar with the documents, there's no need to panic and have your stomach start, you know, doing loops and that kind of thing, because the answers are in these two documents. The problem is that the REPC is 6 pages long. So the first thing I recommend you do, okay, is when you get in there and you come to the section where they're going to ask you questions about the REPC, is you need to kind of flow through it. And that's what we're going to do right now. So Dan has one put up on the screen here, and I'm going to kind of walk you through it. So when you walk in there, you'll notice that this is page 1 we're looking at now. And on page 1, there's some blanks that need to be filled out, but then there's some of these sections and subsections where there's nothing you can put in there. You know, so what I want you to do before you get to that exam is to get a copy of your REPC contract. You know, there's some in your manuals, or Dan would be happy to send you this one if you'd like it, but and read it at least 3 times. Okay, so you're a little bit familiar with the 6 pages and how it's laid out. But a nice thing about it is, if you look at here, it says the REPC, and then below that it says earnest money deposit. So this first little piece here that doesn't even have a number is where you're looking at how much deposit is. So if you had a question about how much is the initial earnest money deposit, this is where you're going to find it. And this is where you find out who the seller is. This is a THE, the seller, and then you know, and you find out who the buyer is above that. And here's the date of the contract. Now, this date right here in this first little section is called the reference date. So when they're referring to the contract, they're going to say it's the contract on this date between this buyer and this seller. And then here's the earnest money. How much is it, Stacy?
$4,000.
$4,000, right, in the form of a check. Okay. Now, I suggest real firmly that you tell your sellers, or tell your buyers, excuse me, right from the beginning, you want a cashier's check. And the reason why is many of the large companies, and even some of the little companies, they're requiring the agents to use a title company to hold the earnest money rather than the broker holding the earnest money. And it makes a big difference to the title company if that earnest money comes in with the cashier's check, because as long as it's under 10 grand, they can count that as cleared funds the moment that check is handed to them and they put it in their bank. There's no bank clearing time frame or anything on that. So this says check, but you know, it's always best to school your people to do a cashier's check. Now, that's hopefully the last practical tip. I'll give you some more practical tips. I can't help but do it, but we're going to blast through this now. So in this first little bit, it's where we find out the reference date, the buyer, the seller, and how much initial earnest money is put down. The next section is referred to as section 1. And this is the actual where we're putting together the offer, at least how much we're offering, and we're identifying the property. So in 1 here, we see the property is located at 13 Baker's Dozen Road, and this is in Happyville, Utah. and the zip code, and then there's a tax ID number. Okay. So if you're asked about any of those things, you go right to the first page, and there it is. Now, underneath that, it goes 1-1, and it says included items. And this has a lot of boilerplate here, and these are things that are normally included in the sale of a home. And so it says, unless excluded herein, then all this stuff is included. Okay. Now, if you drop down to 1.3, it says excluded items. And so if there's going to be any exclusions, this is probably where you'll find that down at 1.3. Okay. Now, the other thing is at 1.2, it says other included items. If you want to reiterate some of this stuff, you can put washer, dryers, refrigerators, microwaves, and you can check other and further delineate this. If you're in Park City, a lot of nicer homes in Park Cities have 2 washers and dryers, and or they have them on different floors, or they have a large laundry room where there's actually it's set up with 2 dryers, 2 washing machines. So you can specify a lot of that in here. And a practical tip, when in doubt, write it down right here. Check it another and add it in, unless you want to be buying it. So, the trampoline was built in. It was built into the ground. Okay, well, you can argue that that's a fixture, but why not write it in anyway? Well, that tough shed, it was actually put in a foundation, or is it on skids? You're probably not going to know. So why not just write it in here rather than buy one? And some of these swing set things, my gosh, are 8 or 10 grand, for some of this stuff. So you don't want to be buying one of those either. So, when I first started in business, I had a lawyer that taught me how to write contracts. We'll just leave it at that for now. That's the subject for another class. But you need to be specific. And I've been criticized by some agents. Oh, you didn't have to write all that in, Rick. That they were going to put that in anyway. Yeah, well, I've never bought anything for anybody, where there was an argument about something. I have bought things for some people, but mostly my kids and others. And sometimes I just give them a whole rebate. All right, below there it says the above checked item. I'm under now 1.2. Convey to the buyer under separate bill of sale. And if you are selling like an Airbnb home, a lot of those can have a substantial amount of personal property, bedding, furniture, flatware, all kinds of things. And they want to include that in the sale. The problem with putting a lot of stuff here, or even in other, is that the appraiser, if it's a substantial amount of stuff, they've got to discount that out of the deal, because their appraisal is only supposed to be on the real property. So if you've got $35,000 worth of personal property, they're going to try to discount that out. Okay. And to kind of protect ourselves here, you'll see between 1.2 and 1.3, it says there are or are not additional items of personal property the buyer intends to acquire from the seller at closing by separate written agreement. So sometimes we'll just put that in a separate agreement, and they'll pay $300-400 or $10 or whatever they want to pay. But that's where you'll find excluded and included items. Now drop down, scroll up a little bit down to 1.4 if you can. Okay. 1.4 is water service. Not all properties include water rights or water shares. Or irrigation water, but some do. And if they do, then this says it includes all the water rights or water shares. And there's water rights are transferred like real property, they with the deed, and water shares are transferred with the bill of sale. They're like shares of stock. This doesn't really distinguish between either of those, but it says if they have any, they're going to give it all up, except maybe they have 10 shares and you only need 5. So they might specifically include from the sale 5 shares or something. Now, remember, you're writing this up for the buyer. You may or may not know all of this, and some agents that are listing agents don't tell you, or they don't put it in the MLS like they probably should. Okay. And so what happens is they're going to probably have to clean that up, with the counter proposal. And that's what this contract actually has one. Okay, looking at section 2, we get into the price now. And this is a little shack for $395. It's got 1 bedroom. It's falling apart. That's what you get for 400 grand these days. That's a joke. But anyway, you put that price there. And then you go down and it kind of delineates where this money is coming from. Well, we got 4,000 in earnest money. And then we got a blank here. Usually I like to see, additional earnest money in section 8.4. We'll look at that as we go roll through the contract. And this doesn't have anything there. So that, I might put a 0 there. And then it's 295 for a loan. And then there no seller financing, and they're going to come in with $96,000, plus the 4. They're going to come in with $100,000 on a $400,000 property. That's a 25% down payment. Really solid offer. Okay, and look down at 2.2. You may be asked a question. Well, does a seller have to sell another property before they can buy this one? Is it contingent on the sale of another property? And you're looking at 2.2 and it says, no, it's not. Okay, so there's a lot of information on this first page. But what I want you to kind of feel comfortable about, because you've read this 3 times before you go into the exam, is that where do these things, when the question is answered, you'll say, well, gosh, where is that anyway? But you'll note at the beginning, it doesn't show that well on this PDF, but as you look at 1.4 water service, 2 purchase price, and sale of property, 2.2, those are all highlighted, and they're all a little bolder font, so that's kind of a good help. So let's go to, and then of course the initial at the bottom. Let's go to the next page, settlement and closing. Now on this page, we have a few blanks. It defines settlement. What is settlement? And then 3.2 defines what is closing. Well, in many states, they mean the same thing. In our state, they mean 2 different things. Settlements when the buyer and seller meet and they sign all the paperwork and the money is delivered that the buyer has to bring in. But the money hasn't come from the lender yet. Closing occurs after the lender's reviewed all the contracts that have been signed, their loan documents and whatnot, and then they wire the money in. Sometimes some lenders will wire the money in advance, and that's called a hot closing, but closing is not going to occur until, look at 3.2, A, settlement's been completed. I mean, people came, signed what they're supposed to sign, and the buyer brought in the money. If the seller's underwater, he's going to bring in money too, but that's unlikely these days. B, the proceeds of any new loan of delivery lender, the applicable closing documents have been recorded. See, closing doesn't occur until the deed's been recorded. All the documents, loan documents, the deed that's been recorded. Okay. So when you look at possession, 3.3, it's upon recording, so many hours after recording, so many calendar days after recording. We're back into saying recording. Okay. And that's when the property actually transfers from the seller to the buyer. Okay. Now look at 4, it's prorations. I'm not going to spend a lot of time on this, but there are things that have to be prorated, taxes. If the property's rented, rents have to be prorated and other things. And then you look at special assessments. When I first moved here to Utah in about 83, I've been a broker in Colorado for a few years, came here, and our contract didn't address special assessments. I thought that was a real problem, so I had to put it on addendums. But a special assessment is it's the definition, if I'm sure you're aware, is where the municipality or maybe the homeowner association, whatever, have put improvements into an area, and rather than them paying for it, they want the owners to pay for it. And like Old Sandy, in Old Sandy's, the streets were put in years ago, and a lot of them didn't have curb and gutter or sidewalks. Well, Sandy decided that, since they're cool now, that they wanted all that to happen. So they put in curb and gutters and sidewalks and street lights. Well, that's fine. But what they did was they billed the property owners by the front foot. Now, if you had a house that was on a corner, then you paid the front foot and then the side of the yard too. So you got really hit. But they allowed you to pay that all now, or maybe over a series of years. And that's called a special assessment. They add it to your property tax. Well, so I'm writing this up for my buyer. I always check the seller's going to pay all those, because, they had the opportunity to pay it up front maybe a year or two ago. They decided not to pay it over time. But, when my buyer looked at the house and compared it to others, all those improvements were there, and they, they would suspect, or at least reasonably think, that those improvements have all been paid for. I mean, it's kind of a crappy thing when you bought the house and then you find out that there's $4,000 worth of assessments that you as the new owner have to pick up and make the payments on those. So I always check seller. Or maybe the listing agent has communicated with you and said there's a problem, but the seller wants to split it, and that you can provide for there, or you can put another thing in there if you need to. Problem we have these days is agents don't talk to each other, so I always weigh it so it's in my client's best interest. If you're selling your own listing, at least the buyer has a chance to know what's going on. Okay, 4.3 fees and payment obligations, escrow fees, rental problems, HOAs. There's going to be some transfer fees. HOAs found out that it's kind of cool, this seller's leaving, a new seller's coming, and so they can charge some money, and make some money and stick it in the HOA fund. And it could be hundreds of dollars, it could be thousands of dollars. I sold a townhouse. One of my sons bought a townhouse in Traverse Mountain, and his townhouse was in two homeowners associations, and both of them had transfer fees that were over $1,000. So that was like $2,500 that had to be negotiated between the parties. This is a problem that agents don't realize. When I see more and more agents selling properties all over the state. Now, I've got nothing against that if you're willing to service a property and if you're willing to find out what's really going on. So I do have a problem with it when the listing agent is listing something down in St. George and they have no idea what's going on down there, or if there's homeowners association, what the fees are and whatever. But if you're willing to go down there, and list a $3 million house or $1.5 million house, more power to you, but at least do your homework so you can do a good job. I don't know how you're going to go show it, but you can make arrangements somehow or another, I guess. Okay, let's roll up a little bit more, please. We got utility payments here. We got, other things that could be split. You can check. And there could be some questions about this, but you'll know they're on the second page. The thing that's really most important on the second page is this section number 5. So we've got a seller and a seller's agent and a seller's broker, and everyone's got their license numbers on here. So this is a single agency. We've got one company representing the buyer, one company representing the seller, and then the agents that work for their respective brokers. And that's very clear here by the boxes that they've checked. Okay. And then we've got a title, some boilerplate stuff about a title company, and you need to be a little bit familiar with that, but there's not a lot of things you can check here. Go ahead and scroll up. And now we're on the next page, page 3. And you see here that we're talking about the fact that, in this particular transaction, and if there's short-term rentals or some stuff up in paragraph 5 that finishes up, but under 6.2 and 6.1 before it, it's talking about the fact that we're going to give the seller is going to buy an ALTA policy, ALTA homeowners policy of insurance, sometimes called the homeowners policy, but it is the most comprehensive type of title insurance that you can get. It's not the cheapo. Now, some transactions, they don't want to do that. Some transactions, for instance, you can't do a homeowners policy when you're only buying vacant land or a lot because there's no house on it, so anyway, but you'll read through that and have a good feeling for that. Seller disclosures, number 7. Here's a whole list of things that the seller needs to put on a property condition statement and give the buyer so the buyer can look it over and decide, is this the house for me or not? And you can even put the very last line, you can put some weirdo stuff that you know about, that you found out about. And pretty much you need to disclose a lot of things, that might have gone wrong in the house. I mean, even if the roof leaked and it was fixed, you need to tell them that the roof leaked, but I fixed it. About the only thing that you can get away with really, and this is in the law, is methamphetamine. So if you had a house that was a meth house and it's been cleaned up and re-inspected and it then falls within whichever health department's rules are for that county, which is usually, less than 0.01 or something, then you don't have to disclose that, because it's covered under a law that we put into effect a long time ago and then altered, amended, that a stigmatized property does not have to be disclosed. So someone that was shot, killed in the house, horrible thing happened in a house like that, violent attack, whatever, someone died in the house, wasn't discovered till, weeks later, or methamphetamine, or someone died of AIDS, and, all these kinds of things. I guess COVID might be in that too now, but it's, you don't have to disclose that. But, any things that like, they can't hide mold, they can't hide different things that they know about the house. Okay, so let's now look at 8. And this is, you will get some questions on this one because it's just real important. And this is what we call contingencies. This allows the buyer to get out or not for due diligence. Now, what that means is I looked the house over, I don't like it, I don't want it, okay? So if is checked here, then he has this contingency, which allows him to walk away for any reason or really no reason for that matter. If it's not going to do that, then you check is not. But that means, if they find out, if they want to do a home inspection, well, why? I mean, they're buying it anyway. They can't get out if they something wrong. But you can see in here that under B, there's all kinds of due diligence items, even sex offenders and the utility cost and insurance costs and all different kinds of things. But the buyer has a right to object and say, look, I'm going to cancel, but I don't want to, but would you be willing to negotiate a little bit to help me defray some of these expenses that I discovered I'm going to have immediately upon moving in or even before I move in? Okay, if you fail to cancel within the deadline, which we'll look at on the last page, then this one falls away. Okay, and then there's 8.2, which is appraisal, and this one is conditioned upon getting an appraisal. A lot of people are paying over the list price today to even get a house. In some cases, substantially, 20, 30, 40, 50, 100 grand over list, depending on the category of the house. It's probably not going to appraise. And so they figure, well, I have plenty of money. I'll just have to pay that. There are banks only going to give me so much loan based on the appraisal. But if the appraisal doesn't come up to the sales price in the contract, and you have checked that it is contingent upon that on 8.2 here, then you can walk away if you want to and cancel it because of the appraisal contingency. But like I said, many buyers are checking is not conditioned because they're trying to make their offer look more solid. And when you're getting 14 offers on a home, you want your offer to look a little more solid if you're serious about buying that house. One interesting fact, though, if you scroll down to the next page now, is there's also a line here under 8.3 where it is or is, financing is or is not required. And if you check B, that it is required, then agents, you'll find out right away that some agents are sharp and some agents are not so sharp, okay? They think because you waive the appraisal that it also waives the financing condition. Well, no, it doesn't. So if for any reason this buyer doesn't like the loan, he can still get out because the loan was not to his liking. And it could have been a 2% loan for 15 years or, whatever, but it doesn't really matter. If he's going to get out of the deal, he could get out of the deal just by not mentioning it was the appraisal that he's canceling. It was the financing he didn't like and was canceling. Or, and most listing agents don't know that. They haven't thought it through. They haven't even read the REPC in a little while. And it's sad. Okay, well, anyway, moving along. But that's not all agents. That's just a few. Okay. Those that do like 3 deals a year or something. Anyway, moving down, there's additional earnest money. And remember, we saw that on 8.4. But if we look at this, is it checked will or will not? It's checked will not. Okay. So the $4 grand is all they're going to get in earnest money. You could put some additional earnest money here if you wanted to. And quite frankly, this is something that we do a lot in commercial. I've done it quite a bit in commercial, but we added this to the REPC a few years ago when we wrote this. Okay, look at number 9. There are or are not addendums. You're writing this up for the buyer, and right now there's no addendums. Okay. Then going down, will there be a home warranty? Yes. Who will pick it? The buyer will, and who's going to pay for it? The seller will. Okay. You see, if they ask you a question, it's on the form. The problem is, this is a timed test. And so if you're not familiar with the form and you have to reread all 6 pages, or the first time you're reading the 6 pages is when you're sitting at the exam, this is going to make your stomach do, have a lot of butterflies. So you don't want to do that. You want to read through this 3 times minimum. Okay, have a kind of a feel where these things are. But once again, there was a header there, home warranty plan. Okay, so let's roll past that one now. And there's a few other provisions here. We'll talk about those, but the seller can't go in and take take out all different things, or change. They can't get more loans against the property when it's under contract. The buyer has a right. It's called equitable title. It's not theirs yet, but it will be theirs when they close on it. And so the seller has some things that they can and cannot do. Just be familiar with those. Everyone that's signing in section 13 has a right to sign. This is the whole deal and nothing but the deal. In 14, mediation is shall or may. Shall means you will, and may means you may or you may not. Okay. Go to mediation instead of, and you can still sue in court if mediation doesn't work, but may, is good, and shall is okay too. And, it depends on, your broker will tell you which one they want you to use. 16 is, here's the default. Okay, if the buyer defaults, here's why and here's what it means. If the seller defaults, here's why and here's what it means. 17 is like every contract in America has this in there so the attorneys can get their fees. Notices, this defines this. And no assignment, which means that if I was buying a property, I wrote it up in my name, and then before the closing, I decide to put it in an LLC or a family trust or, something like that, then I could assign it to my trust. But I can't assign it to a whole different buyer that isn't affiliated with me in some way or another, because that says no assignment, unless that's waived. Okay, obviously, number 20, it is still the seller's house until it's not anymore. So, they should definitely keep that insured. And this is the last page now. Time is of the essence. And this defines everything. It says, must agree to, that extensions must be agreed to in writing by both parties. And the end of day, as printed in this contract, says 5 p.m., which is the end of business, which is really inconvenient. If you had an addendum on this, for some other reason, it might be good to add in there that it's not 5, it's 10 p.m. 5 o'clock comes really quick, and it's really difficult sometimes to get all these deadlines complied with. Electronic transmissions, counterparts, acceptance, it defines acceptance only. Acceptance occurs only when it's been presented. They say, yeah, I'm going to do it. They sign it. They send it back to your agent. And when your agent knows, they consider that acceptance. So your agent will call you immediately and let you know. And then in paragraph or section 24, seller disclosure deadlines. And here's all the deadlines. The seller disclosure deadlines where they have to tell you everything they know by June 28th. Due diligence, that's your right to look over the things and say, I want it or don't want it. Financing and appraisal deadline. Even though that deadline is the same, those are 2 different contingencies, which I already told you. And then the settlement has to be done by July 19th. Would invite you to sit through my settlement and closing class after you get your license. You get the CE credit for it. It's online and then through the school. But it gives you lots of strategies on why you would pick different days and how to kind of get a feel for these dates and how to do those. And then it was given to the buyer, and the buyer looked it over and looked down under acceptance and counteroffer rejection. Did they accept it? No. They checked what? Counteroffer. You see that? They checked counteroffer. So let's go to the next page, which is the counteroffer. Okay, so this is addendum 1, but when you wrote this contract up, you were representing the buyer and you didn't know they were going to counter. Okay, if you had addendums on here, like probably the most used one is the title company is going to hold the earnest money. That would be fine, because you knew that as the buyer's agent. But this is the seller's agent writing this counter. Let's see what they're concerned about. Well, first they, offer a reference date. They got that off the first page and who they are. And these things will be, the following items are hereby incorporated as part of the REPC. Items excluded from the sale of the property, excluded. So the buyer's not getting these. They're not getting the dryer, the freezer, gas grill, barbecue, main level refrigerator and washer. Okay, they're not getting that stuff. That's clarified. Okay. Items included in the sale. See, I like this. This is real specific. The basketball standard, the ceiling fan, the range, storage, shed. Okay. And the due diligence deadline will be 10 days after acceptance. Okay, so they'll get the they'll get those disclosures right away. I mean, this is a great listing agent. He's got them all put together, and as soon as this thing's accepted, he'll get those to the other agent. The agent will get them to you. And I'm talking about those items on the property condition statement. And then you got 10 days after acceptance, not from the time you got them, which you'll probably get them immediately, but you got 10 days. And they changed the settlement deadline to the 10th. Now, back up, Dan, to the last page. Okay, the original settlement deadline was what? The 19th. They said, nah, you don't need that much time. So they want to keep it tighter. Oh, wait a minute. No, they're going to August. Was that July? Okay, yeah, they want more time, less time. That's unusual. Okay, well, whatever it is, it's right there in the counter proposal. And then the buyer signs that, and look what he does. The seller signed it, right? And then it goes back to the buyer, and the buyer checks acceptance and signs it. And this is, now we have now we're under contract. Okay. Now with that, let's look at some questions. Okay. Now, when you first get there, go through it real quickly. If you've read this 3 or 4 times, 3 times, okay, then you get kind of the feel. Oh yeah, those dates have been changed. Okay. Oh, there was additional earnest money. In this one, there wasn't. But you go through and you have a feel for it. So let's look at some of our questions here. What is the settlement deadline? Now, this is tricky, these devious exam writers, because the contract had a date in July, but the counteroffer had a date in August. Yeah. So, what will some people taking a test do? They won't look at the counter that closely. But it's right there. It's right there. Yeah, right there. So what is the settlement deadline? Well, it was like July or no, August something or other, right? Yeah, wherever that was. Included, excluded items, due diligence, 10 days. Yeah, there it is. Yeah, or that last line, and it's not highlighted, but the seller will close on that other day. Okay. Is the refrigerator included in the sale? Now, well, I mean, you could look at that inclusions and exclusions on page 1, right? But hey, you read that counteroffer because you reviewed the contract before you started to answer the questions. And in the counteroffer, which is addendum 1 here, is it or is it not included? No, it says it's included with the sale will be the basketball standard, ceiling, range, and storage shed. But up above, excluded specifically is the refrigerator and the washer. Okay, so the answer is no, it's not included. Okay, when was the now you can leave that up. Well, I guess you're going to pull it up again. When was the REPC accepted? Well, the REPC was countered, and so when the buyer agreed to the counter, that's when it was accepted. So we're going to look at that date, and it's right down there. He checked acceptance, and on the 22nd was when it was accepted. Okay, June 22nd. See, it's a crib sheet. It gives you all the answers. The problem you're going to have is if you're not familiar with the forms, you're going to take too much time trying to get familiar with the forms. Well, so obviously I've been encouraging you to get familiar with the forms before you go into the test, okay? Who represents the buyer? That was that back there, is that section 5 again, right? On that second page. So, well, you know, that's where it is. Hot Dog Realtors or whoever they were, okay, was my old buyer. Okay. Is the seller represented as a limited agent, or is this single agency? Does the seller have his own agent? Yes. Does the buyer have his own agent? Yes. Okay. Well, that's single agency. It's not limited agency. If it were, if you look at that you know, further there, you know, it's the seller, both buyer and seller, that would as a limited agent. Okay. Well, we're not doing that. Otherwise, it'd say so right there in the contract. It'd be the same firm, the same agent. All right, here's another one. Who's going to pay for the special assessments? That was back in the special assessment section, which was section 4. Okay. And that's on the second page and right there. And it's checked what? Seller. Now, I don't expect when you kind of roll through this thing for you to remember all these things. It's just, it will help you remember kind of where they are. Well, that was on the second page. But, you know, it has a bolded headline there on 4.2 special assessments. Yeah, that's going to help, right? Okay, when will a buyer take possession? Okay, and that's on that second page as well. And so we look up there, it says possession, right? And when do they get it? Well, upon recording. Okay, which means the seller's going to have to move out before they get their money. Okay, and so, you know, I mean, a lot of times that this is more customary right now at recording, you know, so they pack up, move out. Well, what if something goes wrong and it doesn't close? And we got a real problem. You know, they got to move back in and get rid of the U-Haul and the whole problem. It's going to be a real problem. So you want to make sure it's a really firm deal before you ask people to start moving out. It wasn't that many years ago that it was like 3 days after recording, you know, a day to move, you know, pack up and kind of get things out, and then a middle day to kind of finish that, and then another day to go back in and clean or whatever. But, you know, I mean, that's all negotiable, right? And this particular paragraph could handle all different kinds of eventualities. So I don't know, it's really I think very helpful to be able to talk to the other agent, you know, talk to the listing agent and say, what about this? What about this? You know, well, they would really prefer not to do that. They really, you know, there's no way that they can get out on recording. Okay, because they don't have the money to rent a U-Haul. They're, you know, they're kind of tight. Or they don't want to do it. He probably wouldn't say that. He'd probably say, well, they want to make sure it's a firm deal before they actually pack up and move out. So whatever. But, you know, but on the other hand, you know, I mean, you're representing your buyer. You're going to probably do whatever they want to do. You know, one of the great things about our business is that we all share with each other, you know, and we're all trying to make a deal. And they're not going to violate their fiduciary and talk out of school, but the other thing that's very helpful is you could talk to some of your other fellow agents and you know, people that are mentoring you or whatever, and they say, well, write it up this way. This is more common. Okay. And how much was the earnest money? Right? Is that we all the way back to that again? Oh no, yeah. Well, we already saw that, you know, it was $4,000, right? Was there additional earnest money under 8.4? No more money. It's just $4,000. Okay. And you're going to get in the habit of telling your buyers to give it with a cashier's check, right? Right. If it's over $10,000, talk to the title company and see how they want to handle that. Might be better if the buyer wired it in, but you know, there's all kinds of situations. This says they're going to give a check, so you know, we can't dig any deeper than that right now. What is the tax ID on the property? Well, that was way up at the beginning, wasn't it? You know, when we were identifying the property by address and city, state, county, and also the tax ID number. And it's just, you know, the number that Dan assigned to this one. Okay. Buyer finds a leaking roof and wants to cancel on the 6th. Okay, where are our cancellation deadlines? Very last page, right? Very last page. But we have a counter proposal, don't we? Oh my gosh, the addendum modified that date. Remember, on the addendum up here, it says that you know, the due diligence deadline will be 10 days after acceptance, which this was accepted on, let me see, the 22nd. So, you know, that's the first day of the, you know, or first, anyways, the deadline is July 2nd now, because it was accepted on June 22nd, yet 10 days after acceptance. Okay, now go back a page, Dan. Our original, what we asked for on our due diligence, when you wrote this up for your buyer, go back one page, Dan. Oh, I guess you can't. I'm sorry. Let me go back one page. I got, okay, there it is. Yeah, our original due diligence was the 7th of July. So, you know, what was our new one, Dan? By addendum, but it's 10 days after acceptance, so it's right at the first of the month. Yeah, and so go to that. Well, it was July 2nd. So that's shorted at 8 days over what it was originally, okay? See, that is a landmine that a devious exam writer wrote into this particular contract so he could screw you up. Because a lot of agents are going to go right to that, you know, that paragraph 25, and they're going to see that date and they're going to say, okay, there it is. And I'll guarantee you that'll be one of the wrong answers. It's not going to get you though, because you're going to read through this and you're going to see that it's a counter proposal. It's going to, and some of those things were changed. Okay, settlement hasn't happened yet, and it's July 31st. Who is in default? Nobody. The settlement deadline was changed to August 10th. Okay, right here in the counter proposal. Boy, that's a double tricky. Yeah. Yeah, I hope you read it all, or you just glance through it. I mean, so much of it is printed anyway. It's just, you're just looking at the blanks that were filled in. Okay, can this contract be emailed? Well, let's look at the acceptance paragraph, paragraph 22. And it says, oh no, it says electronic transmission, sorry. Electronic transmissions and counteroffers are just as good as a physical contract. Why? Well, because we agreed to it in the boilerplate language of the agreement. And that's very, very typical. I mean, we're even seeing a lot of people do remote closings where they're doing electronic signatures and the whole 9 yards these days. Okay, next question, please. June 22nd, is this contract executed, executory, or voidable? Executed means it's put up against the wall and shot. It's done. So will it be recorded by the 22nd? Executory means that it's still in process. You know, once it was signed, and then after it's signed, but before it's recorded, it's in the executory or process stage. Voidable means something has happened where either the seller or the buyer has missed a deadline or defaulted in one way or another, and it's voidable by the other party. I mean, sometimes they just buy it anyway or sell it anyway, and sometimes they say, no, sorry, you had your chance, Mr. Buyer. I'm voiding out the contract. And because you missed a deadline or whatever, I'm keeping your earnest money, and I got another offer I'm going to go with that's 50 grand more money. Nasty stuff. Okay, so let's look at the answer here now. Well, it's in section 24 in our counter proposal. They haven't fulfilled all their promises yet, right? That's what it says here. I don't know if that's quite where that is, though, Dan.
I think the arrow's in the wrong place, but the idea is they signed, and so the contract's all agreed to, but they haven't done it yet on it as of July 22nd. Excuse me, June.
Yeah. Yep. No problem. Okay. All right. Now, our next question. On July 12th, at 5:30. Now, what was the deadline in a contract again? And remember, I said the sneaks up on you really fast, 5 p.m. And that's printed in the contract. So you can, the buyer can change that, with an addendum. The seller can change that with an addendum. Okay. And I think 10 o'clock p.m. is a much more appropriate time. People are getting off work. They're trying, we have I-15 now, which clogs up every night and has accidents. So you're on your way to deliver something, got to get there before 5, and you're stuck on the freeway because of an accident. This is real life stuff. You might want to change those. Okay. Well, anyway, page 6, section 21 and section 24. Okay. Section 21 is time is of the essence and defines that the deadlines are firm and has that 5 o'clock thing in it. And section 24 has the deadlines, and of course, some of those were changed with the addendum. So what is it? It's 5:30. Hasn't gotten approval from the underwriter. Can they cancel? No, the financing deadline ended in July 12th at 5 p.m. Now, can you make someone buy a house when they can't get a loan on it? Probably not. But what does this really affect? Well, it affects their earnest money. Their $4,000 they put up. They're probably going to lose that. And if the seller decides to try to sue them for one reason or another, which they probably won't. I mean, you can't do a lawsuit these days. It doesn't cost 30 grand. So you're probably just going to take the easy 4 and take the backup offer. You may even have 4 backup offers. Anyway, okay. Okay, next question, please. Are solar panels included in this sale? Well, are they? Probably not. Because what I told you was, if you're having weirdo stuff, well, the solar panels are attached to the home. Of course, they're included. Well, it's just not that easy anymore. A lot of solar, it's not specified, but yes. Are there solar panels? Well, yeah, if there were, because the boilerplate says that they are. But as a listing agent, you got to be careful about that, because some solar panels are leased, some solar panels are joint ventured. It's kind of weird. And some are owned, so you got to get that information from your seller. And if it is not owned by the seller and they intend on leaving them, then they would have to have been excluded, like they excluded all those other items. Okay, but they're probably not. So, but Dan says they probably are. Well, I'm saying they're probably not. Okay, all right, let's go to the next one, please. What happened to the original offer on 6/19 when the seller signed a counteroffer? So an offer comes in, the seller's got it in front of them, and they either have, they can counter, which they did. Okay, but a counter is a rejection of the first offer. And so if the buyer didn't agree to the counter, then the deal is dead. The seller can't say, oh, King's X, I'll go with the first deal, because when they counter, that first deal is dead. So only the modified version can be agreed to. The original offer was canceled when they did that. Okay. Okay, that is our whirlwind review of the REPC contract. Now, young lady, what are you going to do before the test?
I'm going to go over that paper.
Yeah, you're going to read the REPC contract how many times a minimum?
At least 3.
At least 3. Now, because what you're trying to do is kind of get a feel for what is on what page and what does it include and not include.
Yes.
Okay. And then when you get the test, I suggest that you kind of roll through that real quickly, just so you get a feel for it. Oh my gosh, there's a counter. I got to be particularly careful about that, because this devious exam writer probably has 2 questions. 2 questions. Okay.
Okay.
Yeah. So if there's 40 questions on the state portion of the exam, and you need a C- 70% to pass, you could miss 12 questions, right? 30% of, yeah. But you don't want to throw away 2 because you weren't careful about the REPC, okay?
Right.
Especially when they give you a crib sheet, right? Okay. Hey, do you have any other questions that Dan and I can address tonight?
I don't think so.
Well, if you're ever stuck on something, feel free to reach out. We're happy to help, and appreciate you being here with us tonight. And how long have you got before you think you'll be ready for the test?
Oh, I don't know. I actually started it like last July, but I've kind of taken a break from it and I'm trying to get back into it. So I have to finish it before July at least.
Okay. Yeah, well, that's real dangerous because you forget, so
Yeah.
you're gonna have to review those sections.
Yeah.
Yeah. Okay. But you're sharp, I can tell.
I'm fine.
Thanks for being with us tonight. Thanks, Stan. Appreciate it.
Alrighty.
Good night, everyone.
Good night.